Hello, this is the chart profit video, Friday 14th of September, about 2.5 hours into the trading day. This from the pre-open today. We're looking at the E-mini S&P. Back on the 29th of August, Wednesday, said that distribution suggests that price above 2900 may be extended. If that is the case, then a fast rejection would take place, and if price broke back below the minor point of control at 28.58.50, that would be the first sign of weakness, and that level being down here, and as you can see, we didn't even test that level. I also said that price acceptance back at 2900 would be a further positive. Here's 2900, and we had a value area printed just above that level on Thursday. So the positives, in the short term at least, as I've broken them down there, from the high day, significant sellers, that would be red, has not been marked, and the minor point of control at 28.58.50 has not yet been tested. So in summary here, although the market has declined, there is no clear sign of weakness, and as long as the E-mini holds above that level, this one, it's in a strong price location. Also said in the pre-open on Thursday that a minor, very minor controlling price had migrated up to 28.87 here, and a breach of that would be our first very minor indication of weakness, and that level is here on the current half-hourly chart, and as you can see, the E-mini is printing up towards the high of the week. Pulse chart still looks okay. We have neutral breadth here. It's the price momentum at the bottom is above zero, so trend is up. We have this negative divergence with price going on, which has been confirmed because the price momentum has turned down just here. This indicator has a habit once it's turned down, and certainly with that divergence, will very often most likely get back to the zero level. But in a strong trend, it will just pick back up again, and that's really what we're looking for. Okay, the comments here are from the pre-open today regarding my version of the Ridex assets ratio, and we know that last week the ratio reached 27.55, which is the exact same level it reached back here in January, which was the highest in the database, and as a contrarian indicator that is somewhat concerning. Good news in the short term is the fact that the ratio has fallen quite swiftly for 4 days consecutively as the market has moved higher over the same time period. As has been the case for a few weeks, the other sentiment indicators don't give us any useful input at the moment. This is the public poll from AAII. Bulls percent was lower this week, 32.1, and the bears percent was higher at 32.8. So we have, for the first time since week ending 3rd of August, more bears in the poll than bulls. Historically, that has put the odds marginally in favour of higher prices over the next couple of weeks. In the LIPA US fund flow data, we had net outflow there over the week of 1.8 billion, not an important number, not a high number. 4-week flow in black here at minus 5.2 billion, just a little below zero. Again, nowhere near an extreme, not particularly useful information. In August, the spider broke above the high from earlier in the year, which is this line here in blue, and you can see that this spider appears to have formed, we could say, hopefully a higher low, almost exactly at the high price here, and a breakout would confirm that above this little minor high here. 285.70 is the 30-day controlling price. That's the first important support that I have on the chart. German Dax Index continues to lag in every time frame. 12.450 is the major, and we're printing below that currently at the end of this week here. Checking my data for the FTSE 100 on a 30-minute basis, the 3-year controlling price at this point moved to 75.20. 30-minute is one of the lowest time frames that I follow. It hasn't done that on an hourly or a daily, but on that minor time frame, looking back over 3 years, it has in fact moved to that level. So I'm moving my important resistance level to that point, 75.20 on the FTSE, and we are sitting here in a weak price location again. UK large caps dramatically underperforming the US. TLT, the bond ETF, has, as we suspected earlier in the week, said that this level was likely to be tested, 118.50, which is the 6-month, and we've seen that today. And when price broke back underneath here, 121, the major, weakened the outlook obviously. Price below this level, 118.50, would indicate a retest of the May low. As I've been saying for a while, you just need to be patient. If you're bullish on this chart, you really need to see a clear higher low above 121. We haven't seen that. No change for USO, the oil ETF, as long as it remains above the 12-month at 12.79. It is in a strong price location. I've sort of caveated that recently by saying that if that controlling price moves higher, we immediately have a new level to key from, and it's quite likely that we will see that happen over time and not much time. So I'll be monitoring that very closely going into next week. Gld the Gold Etf. Lots of commentary still about the oversold situation with gold and the possibility of a bottom developing here, but it's an extremely weak price location below the major, again at 121, and we did test and break below the major value area low at 114.50, and that's where you'd expect a really swift rejection and a climb back, but we haven't seen that. So I'm just not convinced yet about the bullish case for gold. What would be helpful in that case for gold would be to see a clear directional indication from the dollar index. We're not seeing that yet. What we are seeing is this major at 94.80 continuing to build as price oscillates up and down around it. Very, very close to that level at the end of this week. Again, ideally a higher low above that point would be an indication of further strength for the dollar, and therefore a negative for gold. What we can say though is the Euro FX chart remains below its 1 year, which is at 117.55, and that means it's still in a weak price location. It is possible that that could migrate lower and give us a new level to key from, but that's not the situation right now. So the Euro FX chart remains in a weak position, as does the pound below 132, which is the major. So those indications from the euro and the pound suggest that the new uptrend in the dollar will likely continue, and the dollar yen chart at the end of this week is finishing likely up here somewhere above its major at 111.30. And from my way of looking at things, like the dollar index, it's been oscillating around that level, and a higher low above that point would be a clear indication of strength, but unfortunately we haven't seen that yet. Okay, that concludes, and once again I thank you for watching.